It's not how much you know. It's what dumb mistake you avoid. That's the real secret of investing, not brilliance, not IQ, not insider knowledge. Most people go broke not because they didn't find the next apple, but because they couldn't stop themselves from doing something stupid. In investing, survival is underrated. You don't need to be a genius to get rich. You just have to not blow up. Every generation thinks it's smarter than the last. We invent new tools, new assets, new theories, and then proceed to make the same old mistakes in brand new ways. Look around today. People aren't investing. They're gambling with prettier apps. They watch some influencer brag about a 200% crypto gain, and suddenly they think they've cracked the code to wealth. They forget that wealth isn't about the next trade. It's about staying rich once you get there. The truth is simple. You can't compound what you lose. If you blow up your capital chasing hype, you'll spend the next decade trying to recover from a mistake that took 10 minutes to make. But that's the nature of human behavior. We crave excitement more than we crave safety. We'd rather feel like we're making progress than actually build wealth quietly. That's why so many people end up broke, even in a world of unlimited financial information. It's not lack of knowledge. It's lack of restraint. You see, investing isn't a test of intelligence. It's a test of temperament. And most people fail that test, not because they don't understand markets, but because they don't understand themselves. When I was young, I thought I was smarter than the market. I read a few books, made a few winning trades, and suddenly believed I was destined to beat everyone else. It's funny how quickly early success turns into arrogance. I remember one particular trade, a can't-miss opportunity, a hot technology stock everyone was talking about. It had doubled in 6 months, and I told myself, it's only the beginning. So I bought in not because I understood the business, but because I didn't want to feel left out. Within weeks, the stock started to fall. I told myself, it's temporary, it'll come back. But it didn't. It kept falling. And instead of cutting my losses, I did what every overconfident investor does. I doubled down. By the time I finally sold, I had lost half of what I owned. Not half of my profits, half of my savings. It was devastating, but it was also the most valuable lesson of my life. That day I realized something that took me decades to fully understand. You don't get rich by being clever. You get rich by not being stupid. From that moment, I stopped trying to outsmart the market. I stopped chasing the next big thing, and I started focusing on a single rule: avoid big, dumb mistakes. Most people think investing is about making brilliant decisions. It's not. It's about avoiding disastrous ones. Think of it like walking through a minefield. You don't need to find gold, you just need to not step on a mine. If you do that long enough, you'll come out the other side rich. The market doesn't reward the smartest investors. It rewards the ones who stay alive the longest, the ones who can keep their emotions in check when everyone else loses their heads, the ones who understand that sometimes doing nothing is the best possible decision. You see, the human brain is wired for action. When things are going well, we feel invincible. When things are going poorly, we feel the urge to fix it immediately. But the market doesn't care about your feelings. It punishes impatience and rewards discipline. If you study the history of great investors, you'll find a pattern. None of them were constantly trading. None of them built wealth through excitement. They all followed one boring rule: avoid mistakes. Warren Buffett once said, "You only have to do a few things right in your life as long as you don't do too many things wrong." That's not just good advice, it's the entire philosophy of successful investing. The secret is subtraction, not addition. Most people try to get rich by adding more trades, more leverage, more complexity. But the great investors focus on what not to do. They remove risk, remove noise, remove ego. They simplify. Because wealth is a game of endurance, not brilliance. And endurance comes from staying out of trouble. The goal isn't to swing at every pitch. It's to wait for the right one, and more importantly, avoid striking out on the stupid ones. It's not glamorous advice, but it's the advice that keeps you rich when everyone else is losing money. So why don't people follow this rule? Why does every generation repeat the same mistakes? Because avoiding stupidity doesn't feel smart. It feels boring. And humans are addicted to excitement. They'd rather chase a fantasy than build quietly. We live in a world that celebrates risk takers, the entrepreneurs who bet it all, the traders who go all in. That is not work now, but you rarely hear about the thousands who lost everything doing the same thing. That's called survivorship bias. We glorify the winners and ignore the wreckage. But investing isn't about becoming a hero. It's about staying solvent. You can't compound if you're wiped out. Avoiding big, dumb mistakes means accepting that you'll never look like a genius. You'll look cautious when others look brave. You'll look slow when others look bold. But over time, the market humbles the bold and rewards the careful. And that's the great paradox of investing. The more boring your approach, the more exciting your results. The smart investor spends their time reading, thinking, waiting. The stupid investor spends their time predicting, gambling, reacting. The smart investor admits they don't know the future. The stupid investor pretends they do. The smart investor focuses on process, staying rational, staying patient, staying humble. The stupid investor focuses on outcomes, the next trade, the next win, the next high. The smart investor knows that doing less is often doing better. The stupid investor confuses activity with progress. One builds wealth quietly, the other chases it loudly. Guess which one stays rich? Avoiding mistakes isn't just about safety, it's about preserving the machine of compounding. Compounding is the closest thing to magic in finance, but it's also fragile. Interrupt it, and you destroy decades of progress. If you make 20% and then lose 20%, you're not back to zero, you're behind. Because loss hurts more than gain helps. That's why the first rule is never to lose money, not because loss is fatal once, but because it destroys the rhythm of growth. The power of compounding only works when you stay in the game. And staying in the game requires one thing above all else: survival. You don't have to double your money every year. You just have to not lose it all. Over time, even modest returns turn into enormous results. Imagine planting a tree. You don't dig it up every few weeks to check if it's growing. You water it, protect it, and let time do its job. Investing works the same way, but most people can't stand to wait. They'd rather chase the next tree than care for the one they already planted. They forget that wealth grows slowly, then suddenly. The beginning feels useless. The middle feels tolerable. The end feels inevitable. But only if you survive the beginning. Ego is what destroys investors faster than risk, because ego blinds you to reality. It tells you you're smarter than the market. It whispers that this time is different, but the market doesn't care who you are. It humbles everyone eventually. The sooner you accept that, the safer your wealth becomes. I've seen people with six-figure salaries end up broke because they couldn't say, "I don't know." And I've seen quiet janitors retire rich because they simply avoided debt, bought index funds, and never sold in a panic. That's the difference between intelligence and wisdom. Intelligence makes you think you can beat the system. Wisdom makes you realize you don't have to. If you avoid ego, you avoid ruin. If you avoid ruin, you give compounding time to work. And time is the greatest ally an investor will ever have. Today's market is louder, faster, and more seductive than ever. You're surrounded by people shouting, "Buy this, sell that, get rich now." And you think maybe they're right. They're not. They're just loud. Algorithms are designed to make you react. Social media thrives on envy and urgency. You scroll through endless videos of people flaunting fake wealth and think you're falling behind. But investing isn't a race. It's a marathon where most participants quit halfway. Avoiding big, dumb mistakes today means ignoring noise. It means deleting trading apps, muting hype, and remembering that every next big thing eventually becomes the next big regret. Technology changes. Human nature doesn't. The tools get smarter. The mistakes stay the same. When I invest, I don't ask, "How can I make money?" I ask, "How can I avoid losing it?" That simple shift changes everything. Because the path to wealth is not addition, it's subtraction. You don't need to predict what will go right. You just need to eliminate what will go wrong. Avoid leverage. Avoid emotional trading. Avoid what you don't understand. Avoid envy. Avoid debt. Avoid noise. Do that consistently, and you'll automatically do better than 90% of investors. Invert your thinking. If your goal is to be smart, you'll chase complexity. If your goal is to avoid being stupid, you'll embrace simplicity. And in finance, as in life, simplicity wins. Restraint doesn't look powerful, but it is, because it's restraint that keeps you in the game when everyone else loses control. It's restraint that prevents you from chasing a bubble. It's restraint that keeps you calm during crashes. The best investors are not fearless. They're disciplined. They understand that risk never disappears, it just changes shape. And their greatest edge is knowing when to do nothing. If you can master the art of inaction, you can master investing. Because inaction requires confidence, humility, and patience, the three virtues that separate the rich from the reckless. Everyone wants to do something. Few can stand to do nothing. But in markets, doing nothing is often the highest form of intelligence. The gambler wakes up thinking about profit. The investor wakes up thinking about survival. The gambler brags about how much he made last month. The investor thinks in decades. The gambler celebrates risk. The investor respects it. The gambler wants excitement. The investor wants endurance. Over time, the gambler disappears. The investor compounds quietly until one day everyone wonders how he got so rich. It wasn't luck. It was restraint. If you remember nothing else from this, remember this. You don't need to be brilliant to get rich. You just need to stay in the game long enough for compounding to notice you. Avoid big, dumb mistakes. Avoid ruin. Avoid the need to look smart. The compounding machine doesn't reward the cleverest. It rewards the survivors. Every day you stay solvent is a small victory. Every decision you don't regret is a form of wealth. And over time, those small victories compound into something extraordinary. So stop trying to outsmart the world. Just refuse to be stupid, because in the long run, that's what winning looks like.